अगले फिकर के फवारे, ये दुकान भी है और फिनो बैंकिंग का वरदान भी।
फिनो बैंकिंग?
हाँ, फिनो पेमेंट्स बैंक के जरिए मेरे जैसा दुकानदार भी बन सकता है बैंकर।
मतलब ग्राहक को मिलेगा भरोसे वाले का साथ?
हाँ, ये देखो, बचत खाता, चालू खाता, कैश विड्रॉल, एटीएम, मनी ट्रांसफर, बिल पेमेंट, बीमा और लोन भुगतान जैसी सारी बैंकिंग सुविधाएं हाथों हाथ।
फिर तो मैं अपना खाता यहीं खोल लेता हूँ। पर बाके भैया, बैंकर बन के आपका क्या फायदा?
अरे है ना, बैंकिंग सुविधाएं देकर आमदनी बढ़ती है। अरे राम राम, और साथ में कस्टमरों से इज्जत भी कमाता हूँ।
अरे वाह!
और इतना ही नहीं, मेरी दुकान में हमेशा दिवाली और उनकी रहे खाली खाली, दे ताली। चाय पियो, टेक इट। फिनो मतलब फिकर नॉट। अरे सरजू, सुबह सुबह कहाँ चल दिए भाई?
क्या बताएं बाके भैया, बस अड्डे वाले बैंक जा रहे हैं।
अरे फिकर नॉट, अब ये रहा बैंक और ये रहा तुम्हारा अपना बैंकर।
दुकान और बैंक?
अरे पगले, फिकर के फवारे, ये दुकान भी है और फिनो बैंकिंग का वरदान भी।
फिनो बैंकिंग?
हाँ, फिनो पेमेंट्स बैंक के जरिए मेरे जैसा दुकानदार भी बन सकता है बैंकर।
मतलब ग्राहक को मिलेगा भरोसे वाले का साथ?
हाँ, ये देखो, बचत खाता, चालू खाता, कैश विड्रॉल, एटीएम, मनी ट्रांसफर, बिल पेमेंट, बीमा और लोन भुगतान जैसी सारी बैंकिंग सुविधाएं हाथों हाथ।
फिर तो मैं अपना खाता यहीं खोल लेता हूँ। पर बाके भैया, बैंकर बन के आपका क्या फायदा?
अरे है ना, बैंकिंग सुविधाएं देकर आमदनी बढ़ती है। अरे राम राम, और साथ में कस्टमरों से इज्जत भी कमाता हूँ। और इतना ही नहीं, मेरी दुकान में हमेशा दिवाली और उनकी रहे खाली खाली, दे ताली। चाय पियो, टेक इट। फिनो मतलब फिकर नॉट। अरे सरजू, सुबह सुबह कहाँ चल दिए भाई?
क्या बताएं बाके भैया, बस अड्डे वाले बैंक जा रहे हैं।
अरे फिकर नॉट, अब ये रहा बैंक और ये रहा तुम्हारा अपना बैंकर।
दुकान और बैंक?
अरे पगले, फिकर के फवारे, ये दुकान भी है और फिनो बैंकिंग का वरदान भी।
फिनो बैंकिंग?
हाँ, फिनो पेमेंट्स बैंक के जरिए मेरे जैसा दुकानदार भी बन सकता है बैंकर।
मतलब ग्राहक को मिलेगा भरोसे वाले का साथ?
हाँ, ये देखो, बचत खाता, चालू खाता, कैश विड्रॉल, एटीएम, मनी ट्रांसफर, बिल पेमेंट, बीमा और लोन भुगतान जैसी सारी बैंकिंग सुविधाएं हाथों हाथ।
फिर तो मैं अपना खाता यहीं खोल लेता हूँ। पर बाके भैया, बैंकर बन के आपका क्या फायदा?
अरे है ना, बैंकिंग सुविधाएं देकर आमदनी बढ़ती है। अरे राम राम, और साथ में कस्टमरों से इज्जत भी कमाता हूँ।
अरे वाह!
और इतना ही नहीं, मेरी दुकान में हमेशा दिवाली और उनकी रहे खाली खाली, दे ताली। चाय पियो, टेक इट। फिनो मतलब फिकर नॉट।
Good evening, everyone. Speaking on behalf of FINO Payments Bank, I'm Lalit Jaising from Concept PR and your moderator for this virtual Brokers and Analyst event. I would take this opportunity to thank you for taking out your time from your busy schedules to join us. We appreciate your presence and extend a warm welcome to all of you. The objective of today's session is to understand FINO Payment Bank's interest in raising finance via an initial public offering and what they do as a business organization. Under a normal circumstance, this would have been an on-ground event, but we all are getting increasingly accustomed to this as a safer and more convenient format of attending and conducting the roadshow. We hope you gather the same or a better experience from the comfort of your home and office. Before I review the functionality of the webinar, I would like to bring to light that FINO Payments Bank is a profitable and growing fintech company offering a diverse range of financial products and services across the country. Since 2017, having grown their operation presence to cover over 94% of districts as of March 31st, 2021. They became profitable in the fourth quarter of FY 2020 and have been profitable in subsequent quarterly periods. Moving ahead, you'll be kept on mute throughout the event and all questions will be answered via the Q&A chat box only, where you can type your question in session or at the end of the webinar. Would request all participants to please limit yourselves to 3 questions if possible and use a lowercase font when typing the question. Going forward, it is a great pleasure to introduce our speakers today. From the company, we have Mr. Rishi Gupta, Managing Director and Chief Executive Officer, Mr. Ketan Merchant, Chief Financial Officer, Mr. Ashish Ahuja, Chief Operating Officer. The representation from the book running lead managers are Mr. Akhil Kejriwal, Executive Director, ECM Investment Banking, Axis Capital Limited, Mr. Pankaj Agarwal, Managing Director, Head of India Corporate Finance and Capital Markets, CLSA India Private Limited, Mr. Mangesh Kogre, Head of ECM India, Nomura Financial Advisory and Securities India Private Limited, and Mr. Amrut Kalantri, Vice President, ICICI Securities Limited. On behalf of the company and lead managers to the issue, let me thank all participants for being a part of this session. I now invite Mr. Pankaj Agarwal from CLSA to deliver the opening remark and commence this Brokers and Analysts meet. Over to you, Mr. Agarwal.
Thanks. Thank you so much, Lalit. Dear friends, on behalf of FINO Payments Bank and the BRLMs, it gives me great pleasure to welcome you to the landmark occasion of the IPO launch of FINO Payments Bank, growing fintech company and the 3rd largest bank for facilitating digital transactions in India. Let me introduce you the 3 dignitaries from the bank slightly in greater detail. We have Mr. Rishi Gupta, who's the Managing Director, CEO, and founding member of FINO. Mr. Gupta has been with the bank since inception, and it has been his leadership and vision that has brought the bank to its present stature. Mr. Gupta is also the founding member of Business Correspondent Federation of India and has served as the chairman of Economic Affairs Committee. He was awarded CFO 100 Roll of Honor for 3 years in a row in 2011, 12, and 13, and also the top 100 top most influential BFSI leaders in Feb 2019. Along with him, we have Mr. Ketan Merchant, who is the Chief Financial Officer of FINO. Mr. Merchant has been with the company since the past 3 years. He is a graduate from Mumbai University and is also a qualified chartered accountant. He has previously worked with Barclays, HSBC, and Standard Chartered Bank, amongst others. And last, we have with us Major Ashish Ahuja, who is the Chief Operating Officer of the company. Sorry. Mr. Ahuja has been with the company since the past 5.5 years. Prior to joining FINO, he served as a major in the Indian Army for 11 years and has prior worked with ICICI Bank. He holds a bachelor's degree in commerce from the University of Delhi. And from the book running lead manager side, we have Akhil from Axis, Amrit from ISEC, and Mangesh from Nomura. My name is Pankaj Agarwal and I represent CLSA. A little bit about FINO. FINO is a growing fintech company and a leader amongst the few payment banks that are currently operational in India. FINO caters to the unserved and the undeserved population of Indian society, offering a diverse range of financial products and services that are primarily digital and have a payments focus. The bank operates an asset-light business model that principally relies on fees and commission-based income generated from merchant network and strategic commercial relationships. FINO has a well-entrenched distribution network covering 90% of India's district, ensuring a phygital presence through more than 7 lakh merchants, over 17,000 active business correspondents, 50 plus branches and 130 customer service points as of June this year. FINO focuses within emerging India, catering to a population that presents a large market opportunity and that which has typically been overlooked by the majority of the large Indian financial institutions. The bank enjoys strong leadership positions within the Indian fintech space, having ranked third amongst banks in facilitating digital transactions as of early last year. FINO also has the largest network of micro ATMs as of August this year. For the last financial year, FINO facilitated around 435 million transactions, amounting to gross transaction value of about over 13,000 crores. Coming to the specific details of the offering itself, the IPO is scheduled to open on Friday, October 29th, and close on Tuesday, November 2nd, with the anchor book opening and closing on Thursday, October 28th. The issue is for up to 25% of the equity capital of the company, with a fresh issue of up to 300 crores and an offer for sale for 15.6 million shares by FINO Paytech, which is the promoter selling shareholder. The price band for the issue is between 560 and 577 per equity share, which translates to an estimated issue size of approximately 1,174 to 1,200 crores. Listing of the proposed shares is expected by Friday, November 12th. We really look forward to your support in making this transaction a resounding success. Without much ado, may I now request the management to take you through a presentation on the company. Thank you so much and stay safe.
Thank you, Mr. Agarwal, for the introduction to FINO Payment Bank's initial public offering and the issue's key highlights. Payment banks and fintechs have been increasing their presence and reach by increasing touch points through retail outlets and having a wide presence in India. With much further ado, I would like to request the company to please take us through the organization's journey, the struggles, the victories, subsequently take the attendees through the company's investor presentation to cover its business and financial details, as well as touch upon its key strategies going forward. Over to you, Mr. Gupta.
Thank you, Lalit, and thank you, Pankaj, for the introduction. Good evening, everyone, for the broker and analyst meet of FINO Payments Bank IPO. We will start with a short presentation and then we'll take your question and answers. The agenda for the next 15-20 minutes on the presentation is what is FINO, our past and our ecosystem creation. How is FINO different from the other fintechs in the market, and what is our business model, our revenue model to deliver on year-on-year growth. If we come to the first slide, which talks about the journey of FINO. FINO was started in 2006, incubated by ICICI Bank, to look at the large unaddressable market and enable technology-led solutions so that we can bring financial services and access to financial services for the large underbanked population all across the country. Our 15 years of experience of understanding the customer, the product, the geography, the technology has given us an edge. And that resulted in also Reserve Bank of India giving us a payments bank license in 2016-17. We were the only practitioner who got a payments bank license. From being a semi-regulated entity for the first 10 years, in which we did large-scale national projects, to fully regulated entity for the last 5 years, we enjoy the benefit of regulation. And this has also resulted in ownership of customers and products. FINO Payments Bank or a payments bank license is very similar to any other license issued by the Reserve Bank of India, with a couple of boundary conditions, like our end of the day balance cannot be more than 2 lakh of rupees and we can't offer credit on our own books. But we have got partnership and partnership ecosystem through which we are able to provide such products. We are the only scheduled payment bank which is profitable. We have set up the bank with low capital. With this, I come to the next slide in terms of how did we went around building the bank or the model of the bank per se. So FINO is largely focusing on the emerging India, which is the middle pyramid of the country. They require a very different model to get access to financial services. So FINO has built up a merchant and a mobile ecosystem all across the country. Our merchants are basically your mom and pop shops in your neighborhood. Could be a sweet shop or a chemist shop or a grocery shop. And these are people we enable on digital tools to offer products or bouquet of products like, say, current account, savings account, money transfers, cash withdrawals, loans, insurance, bill payments to the customers who are there in that neighborhood. So a customer comes to a merchant while he's buying his groceries. He can also withdraw money. He can transfer money to his relatives. He can do bill payments, recharges. So at the convenience of just going to a grocery shop, he can do banking services. And that is the goal of FINO. That is the purpose of FINO. And that is something which we are aspiring to grow into the country more and more. Our merchants are different from a payment acquiring merchant ecosystem. Payment acquiring merchant system is largely put a QR code or a debit POS machine in which you can pay electronically rather than paying in cash. Our technology platform, which we have built, in which a merchant is able to offer multiple products to the customer, is something which has been built with the last 10-15 years of experience. And for every transaction we do, a part of the income is actually shared with the merchant. So this leads to a higher growth momentum also for the merchant. As I mentioned earlier, our customers are largely in the middle pyramid of the country. They are the people who require a different model. So we have built up a phygital model, a model in which we connect the customer on the physical as well as assisted digital and taking into digital over a period of time. The idea is that the customer can come to our merchant point to do transaction on physically. If he wants to do digitally, he can go into our FINO BPay app and do transactions on that platform seamlessly. Let me take you through the principles on which we set up the bank. When we were putting up the bank 5 years back, we said we need to build on 3 principles. Principles around scale, service, and sustainability. Looking at that and the challenges which the customers were having, we came with this unique approach called DTP, which is distribution, technology, and partnership. FINO has created one of the largest network of financial services all across the country. More than 90% of the districts are covered with more than 7.7 lakh touch points. We are quite wide and we are going deeper as well. Technology has been the bedrock, the thinking, our merchant interface, the customer interface processes. Everything runs on technology. We are actually harnessing the strength of distribution through our technology platform. We also believe in building partnerships, building business with partnerships to scale fast and to scale profitability. We believe in getting the right partners around distributions, products, or technology. We want to leverage each other's resources. So the entire thinking of FINO is on this unique platform called DTP, through which we are able to bring millions of customers to our ecosystem in a sustainable manner. If we go to the next slide, gentlemen, ladies and gentlemen, it talks about the journey of a customer who comes into our platform and how he from a physically moves to a digital journey. This was in one of my visits close to Varanasi. I met a family who was into tin fabrication. I asked him, why did you become a FINO customer? He said, sir, my branches are very far. I can't travel so much. It costs me to travel many times when I go to a branch, a bank. I'm not able to get good service. So it has been not a very pleasant experience for me. But when FINO opened up a merchant point and converted that merchant point into a banking agent, I started to utilize the services which are offered through the merchant. The merchant was known to me. I trusted the merchant. With few transactions, I knew that the technology platform or the technology of the bank is good enough for our businesses. So I opened up a bank account. I started to deposit small money, withdraw small amounts. I started to do money transfer service, which was earlier I had to travel physically to give the money. Now I can do it through remittance. I have a small loan for my shop. I can pay it on my EMI. I downloaded the FINO BPay app. My son, who is about 15, 16 years old, helped me, and the merchant helped me in downloading the FINO BPay app on my smartphone, and I am able to do bill payments and recharges. So through FINO journey, through the phygital ecosystem, the customer was able to get into physical, and over a period of time, for some products, he moved into digital. And that's the journey which we are building for not only one customer, but millions of customers all across. And the physical part and the digital part goes hand in hand in that process. Our customer acquiring is a profitable model. We charge for every transaction. We don't open any accounts for free. As a company, we don't believe in cash burns and freebies. If we go to the next slide, which talks about, Ashish, which talks about the investment highlights, let me come directly to the opportunity slide per se. If you look at the opportunity slide, there's a pyramid on the left. The top end of the pyramid is highly bank pyramid. A lot of private sector, public sector, fintechs are there in that ecosystem. There are people who are already using banking services, very commoditized, very competitive. The emerging India is where we are focusing on. This is the pyramid, as I mentioned earlier, somewhere around 50-60% of the country. They require a different model, a model in which we are physically present as well as digitally equipped. We believe through this model, we'll be able to get a lion's share of the overall market in the emerging India. The ATM network, the branch networks are not growing because of the high fixed cost model, which also argues well for FINO. If I look at the digital payments, and we have seen a higher digital adoption coming, but largely at the top end of the market, it is going to percolate down. It is percolating down because of our presence in the hinterland, in the entire Bharat, within the India or within the metros also. The physical approach to our business, along with the digital, which we call digital, is a perfect model to bring those millions of customers onto digital platform over a period of time. With this, I hand over to Ashish to take us through the next few slides.
Thank you, Rishi. Ladies and gentlemen, the factors that Rishi highlighted in the previous slide, the growing opportunity, coupled with the DTP model that he explained, put FINO into a fast-growing fintech position with a leadership position across various of its product lines. If I take your attention to the top left-hand box, you would see micro ATM and APS. This, ladies and gentlemen, is what a micro ATM looks like. And I'm sure you know that this is what an Aadhaar-enabled payment system device looks like. What are micro ATMs? All banks in India put together 200,000 ATMs and a stagnant industry for some time. One bank, FINO Payment Bank, 240,000 micro ATMs as at the end of last financial year, giving us a staggering 55% in market share on that product. APS, we're the fourth largest acquirer on that side in the country. Cash management services. We do in excess of 15 billion INR on a monthly basis in terms of CMS throughput, with clients across industry segments, MFIs, NBFCs, taxi hailing apps, e-commerce, logistics. You name an industry which requires cash burial, we'll have a client there. CASA and debit cards, fast-growing verticals for us, a 3.1x growth in CASA accounts since FY19. Our CASA philosophy is a subscription philosophy. We charge the customer a one-time fees and give him a high level of throughput and value transactions, but do not expect a minimum balance from the customer. How do we go about doing this? 94% districts, 92% PIN codes. That is FINO's presence at the end of last financial year. What did we get across enabling segments? 1329 billion in terms of annual throughput, 435 million in terms of annual transactions, and we ended at 2.6 million CASA accounts. We were opening 3,000 CASA accounts per day last financial year. That number currently stands at 6,300 accounts per day. In terms of income, 7.9 billion in total income, 792 million EBITDA, 205 million net profit at an ROE of 15%. Ketan would take you through the deeper numbers in the next few slides. Coming to the DTP model, Rishi explained the model. I'll stick to a few statistics. On the distribution side, we were onboarding 1,000 merchant partners a day last financial year. Currently, that number stands at 1,100 to 1,200 merchant partners a day. 94% PIN code, 92% districts. We still feel there is a huge runway available to go deeper and deeper in terms of distribution in a large country like ours. Technology, I'll cover that in my next slide. Partnerships. I mentioned CMS, 85 plus clients at the end of last financial year, growing at an acquisition rate of 8 to 10 per month in this sphere. 45 plus neobanks and fintechs on our API plug-and-play platform. That's a 2.2x growth in terms of number of clients acquired from FY19 to FY20. Ladies and gentlemen, that is the partnership philosophy that Rishi was talking about. Alongside, we believe that this is not an easily replicable model. Why do we do so? 2006, 2021, 15 years of experience of FINO serving the hinterland at the remotest possible corner in the country. That's the experience we carry as a company. To do this, you would require an organization structure, technology, process, product, and more importantly, an organizational culture to deliver in the remotest possible corner of the country at the lowest possible transaction cost. To make the neighborhood mom and pop store, the kirane ki dukaan banker banane ke liye, you would require an intuitive, innovative, and scalable use of technology. For that individual to trust the platform to onboard more and more customers and do more and more transactions. Coupled with this, we have a dedicated call center and utilization of backend tools to drive productivity, engage the merchants, resolve issues. As also, we keep bringing in more and more products onto the platform to engage the merchant, improve stickiness, and to improve the merchant's income. Merchant income up, FINO income up, win-win situation for both. Technology. As mentioned earlier, this is not only a core strategy or core belief, this is also the bedrock of our omni-channel experience that we offer to our customers. The 4 cornerstones transact at convenience, bank at a doorstep, builds trust, widespread reach. Ladies and gentlemen, it is very important to understand that our core target segment does not have 2-3 hours in a day to go banking. Days earnings gone, days wages gone. Needless to say, we do not leave any technology tool, as you can see at the top of the slide, that can help us drive productivity, engage the merchant, onboard more and more customers. With this, I hand over to Ketan for the next section.
Thank you, Ashish. Good afternoon, everyone. The title of this slide, Asset Light and Scalable. This is something which you heard umpteen times from Ashish and Rishi over the last 10 minutes. Here, I'll just take you through how are we asset light, how do we implement, and how does that lead to scale? What is our business model? To begin with, Ashish earlier displayed a micro ATM, which is a device which is as small as a phone, and he's showing it now as well. So ladies and gentlemen, this is what we use for cash withdrawal. This device does the function of a traditional ATM, which all of us know. Now, cost. A micro ATM is costing INR 4,000. Traditional ATM, INR 550K. Ladies and gentlemen, this is how we've revolutionized technology for giving the right services in an asset-light manner for our target segment. Asset-light as a philosophy, it is not only in technology, it is embedded into our thinking. Everything which we think and do is based on asset-light. Another use case on that is distribution. 641,000 merchants as at March, currently the number in excess of 750,000 merchants. All of this, when a merchant distribution point is onboarded, we spend zero capex cost. FINO has to spend zero capex cost. In fact, it is a PAT positive model, like customer acquisition model, which is PAT positive. Our merchant acquisition is a PAT positive model. How does it all work? The merchant is onboarded, he's given the right skills, infrastructure, devices, training, and he starts transacting. Once he does transactions, incremental revenue comes. Part of that is given as commission to him, and the net margin remains with us. The net revenue, net margin for FINO comes without any marginal cost. When we were contemplating the asset-light model, one of the things which was playing or we were cognizant of was risk. Can such a model be relatively low on risk? And the answer to that is yes. And we've implemented it off because it's a prepaid model. To explain or to elaborate, prepaid model means a merchant has to put money into the bank account, deposit money, based on which a transaction limit is set. And he can only transact within that limit. Once the limit is utilized, the system closes his transactions. So, ladies and gentlemen, this leaves FINO with zero operation risk on the transactions which we are doing. INR 1.3 trillion transaction which we've done in FY21. Credit risk, by virtue of our regulatory license, we do not have credit risk on the book. We have zero credit risk on the book. And this resonates with FINO's pick or not in the current times. Scalability. Give a perspective, I mentioned about asset light. Ashish earlier mentioned that we've been growing our merchant network or distribution point. We grew by 1,000 merchant points or added 1,000 merchant points every year last year. And now we are adding 1,100 merchant points. All of this can happen because of zero capex cost and the asset light. We cannot imagine a traditional brick and mortar branches based business scaling up so fast and leading to the transaction volume which we've done. When I say asset light, it is all about judicial utilization of capital. We definitely invest where it matters, and we've done that in technology and infrastructure, which makes us believe that we are on the cusp of operating leverage. Thank you, Ashish. Before we go into how operating leverage is coming through and what have we benefited and how will we benefit, very quick, some statistics out here. Since the beginning of the bank in 2017, we've invested INR 4.5 billion or 450 crores into the business as capital. Of this, 180 crores has been put into technology infrastructure. So the point is, process, compliance, technology, platform, ecosystem, all is there. We have a well-oiled machinery and we are just running it to enhance transactions. And when we do more transaction, it leads to higher revenue without the proportionate increase in the cost. Coming to the data out here, the left-hand side chart, revenue over operating cost. FY19, it is 0.87. FY21, it is 1.04. A testimony of what I just said. Revenue growing faster without interproportionate cost increase. Ashish earlier mentioned technology is the way we think, and by that virtue, we add people where it is relevant. In FY21, our headcount is 4% lower than the previous year. However, revenue per employee has increased by 16% to INR 2.9 million. This is how we are leveraging the ecosystem which we made, and we believe that's the platform which is meant for growth as well. Ashish, next slide, please. What have we achieved? The asset-light model, which I just mentioned of, how have we achieved it until thus far? If you come to the top left side of chart, it is all about throughput for us. Because ladies and gentlemen, we are a fintech with regulatory enablements. We have a name bank, but it is about a transaction-oriented business which we look at. INR 1.3 trillion or 130,000 crores of throughput which we've done in FY21. 71% CAGR growth over last 2 years. COVID impacted year 2021. The world was struggling. Everyone was working on the pandemic and trying to revive. Our growth, 41%. Yes, 41% in a COVID impacted year. Remaining on COVID, if you come to the bottom left chart, remittance. Remittance was our only product which got impacted. This was because the urban population moved to rural, and that impacted the remittance. In remittance, we degrew by 29%. But ladies and gentlemen, despite a 29% reduction in remittance, our total throughput in a COVID impacted year increased by 41%. A testimony of how well diversified our product suite is. We have a diversified book. If you see micro ATM, AEPS growth of more than 200%, 151% CAGR, CMS growing at 273% CAGR. From here, how do we take it further forward? The best way to do it off is owning a customer. Ashish earlier explained, if you come to the top center, 75% CAGR over last 2 years in CASA accounts. For us, it is all about transactions. Of 2.6 million accounts, 70% of accounts are active. Ashish earlier mentioned it is for the unique proposition which we brought into the fintech space is liability on subscription based. This ensures that we have an annuity income or year-on-year renewal income without any corresponding risk on balance sheet. Debit card issuance transaction count growing in line with the CASA strategy. FINO BPay, that is our mobile banking application. Rishi earlier mentioned about we being, tapping the customer early and helping him in journey of digitalization. Our mobile banking application usage has increased by 193% CAGR over last 2 years. Rishi, back to you.
Thank you, Ketan. If you go to the next slide on the board, we have 8 board members, of which 5 of them are independent board members. They come from multiple backgrounds on finance, technology, retail, marketing, banking. We are very strong on governance as well as on compliance, being a bank as well, very strong on governance from the history of FINO. Marquee investors like PPCL, ICICI Group, which includes ICICI Bank, ICICI Pru, ICICI Lombard, Blackstone, IFC, Intel, amongst other investors. High on ESG also because of the financial inclusion business which we are doing. If we go to the next slide, which talks about the team, this is my favorite slide. This is people who have built FINO. This is the team FINO, highly committed, experienced, knowledgeable. Many of the team members have been more than 10 years in FINO as well, and some of them have joined us during the bank. Very fortunate to have them. With this, I hand it over back to Ketan to talk about financials.
Thank you, Rishi. That was indeed a passion of a founder. Let me now explain everyone. How do we make money, or what is the model about? And this is the simplicity which we are attempting to put out here. Key products: remittance, micro ATM, AEPS, CMS, BC banking, CASA. Key products. How does the revenue distribution look like in FY21? 1/3 of the revenue came from remittance, 1/3 came from micro ATM, AEPS, 20% from BC banking, 8% from CASA, and 4% for CMS. How do we earn? What is our business model? Just to reiterate it off, we are a transaction platform. For us, it is all about transaction and not NII margin or the balance sheet risk. For products like remittance and CASA, we charge from the customer. I earlier alluded towards CASA, it's subscription. People come and pay year-on-year fee and they are allowed free transactions. Remittance, it is about our target segment customer who comes to our urban points and he transfers money. We charge for that. These are the two products wherein we essentially charge for the customer. For micro ATM and AEPS, it is the interchange mechanism fee, wherein any debit card comes, and people can come to our point and withdraw cash. I had explained earlier how small a micro ATM looks like. CMS is the your CMS. It is not about transfer of cash. It is not about float business. It is about facilitation of collection for the business partners which we have. How does it all work? For every product which we have a certain margin. We have take rates. Our weighted average take rate is 60 basis points and our margin is 34%. The remaining is what by product we end up giving it to the merchant. Resonates with what Ashish says. Merchant earns, we earn. That is our philosophy. It's all about partnership. Ashish, next slide, please. Yes, this is indeed my favorite slide, and perhaps most of you guys would see my passion as much as Rishi's on the people front. It is not about it is numbers or commercial, but this is because it is a testimony of what we call ourselves, a fast-growing, profitable fintech, a unique proposition. It's not a balance sheet business. Whilst we have a name, bank, it is about transaction platform. Income growth, 46% CAGR, COVID impacted year. We discussed earlier, that despite COVID, we are growing. How does the income get bifurcated? 97% of income comes as fee income or non-funded income. 3% comes from balance sheet. Our EBITDA margin is 10% as we speak. This is on account of the asset-light variabilized model which we run. Just to give a perspective, 71% of our total OPEX cost is variabilized in nature, which means we have to pay only when a transaction happens. Resonates with what Rishi said. We do not believe in a fixed cost model. We believe in a very lean model and an asset-light model. Lalit earlier mentioned our profitability journey. Yes, our profitability journey started in quarter 4 FY20. Jan to March 20 was our first quarter of profitability. Since then, it has been 7 consecutive quarters of profitability and growth. FY21 numbers, INR 205 million. Previous year, there was a loss of INR 320 million. Full year ROE of 15%. So how does it happen? We focus on growth and profitability comes. That is how the model has been devised. We will continue to grow and the model will generate profitability for us. To sum it up, why does this happen? Why both growth and profitability is coming? One is no cash burns. We do not believe in freebies. We will price the product and customer pays, and that is working fantastically well for us. Second is well-diversified revenue stream, which I explained earlier, with margins in certain products in excess of 40%. Yes, micro ATM, AEPS, CMS, and CASA all have margin in excess of 40%. And the third one is the leverage point, which I just alluded towards. The operating model which we've made helps our revenue to grow faster as compared to a corresponding increase in the cost. Rishi, back to you.
Thank you, Ketan. If we come to the last slide on growth, as such, FINO has already set up the physical infrastructure and has started to build the digital journey for our customers, starting with customers opening an account. From 3,000 accounts to nearly 6,000-7,000 accounts per day now. Customer has the experience of using FINO's debit card and UPI app on his phone. Average customer spend on the POS and e-commerce has gone up from 735 rupees in April 2020 to 1,400 rupees in July 2020, which shows that the customer has started to use digital tools. As his journey continues into the FINO ecosystem, he will use our debit card more and do more of online transactions. This will lead to higher digital adoption for a customer, which will make him digital native. That is the goal of FINO for the emerging India for the next 10 years. This is not going to be an overnight transition. It takes months for a customer to get familiar with digital and generate trust. The differentiation of FINO lies in the fact that we don't believe in burning money. As we speak, 20% of our retail transactions are happening on the UPI platform. Looking at the opportunity and to bring customers to digital platform, FINO is well positioned to leverage its first mover advantage, the phygital model, which I spoke about a little while ago. We will ramp up our digital overlay and build comprehensive mobile app ecosystem. We have already started building up the team as well as digital products. All of this on frugal capital base with no cash burns with a positive ROE on a long-term basis. With this, we come to the end of the presentation, but I would like to leave you with 3 key takeaways. The opportunity is big. FINO has been able to scale the business quite well, and we believe the phygital model is a perfect model for this emerging India. We have cracked the code of addressing the mass market through our asset-light technology solution. We are a growing as well as a profitable fintech, which is quite rare to find in today's world. With this, we open up Lalit for the questions.
Thank you for taking us through the presentation. We hope the attendees have captured enough and more understanding of FINO Payment Bank's business model, financials, its execution capabilities across various channels, and the diversification opportunities at hand. Before the floor is open for the participants to ask their questions, I would like to reiterate to type your name and organization details in the Q&A chat box for the moderator to take note and address your query. Note, in the interest of time, we will be restricting to 15 to 20 questions only, and repetitive questions will be skipped. Sir, a question on, are you going to look at the credit route ever in your journey as a company?
See, Lalit, I can't say ever is you can't say what is going to happen in the future. But right now, I can say that our payments bank model is working quite well. We are growing quite well. Profitability is there. We have been able to address the large markets. There is a lot of scope in the current business for us to grow. And we are offering more products as well as expanding our network. And it's a profitable growing business. So to say, we don't carry the risk of credit on our books right now. Credit itself is going through multiple challenges and pains as we speak. What is going to happen in future on credit as a SFB is something which we'll have to cross that line when we reach that stage. We are still 1 year away nearly for that eligibility to convert into a small finance bank. Right now on credit, we have got partnerships, especially with NBFCs and banks to offer gold loan products, micro loan products, as well as micro consumer loan products, as well as merchant loan products. So credit as of now is more on partnership model. Optionality is there in the future. We'll decide at that point of time whether you want to offer credit or not. Nothing as of now.
So moving to the next question, sir. There's a question which asks, when can we expect a reverse merger?
So again, on this, there are regulations which are there. After 5 years, we can reverse merge our holding company into the bank. That will happen 9 months down the line. It makes sense to bring all the investors from the holding company to the bank at a later date. And that is what we plan to do.
A question on why our market share in AEPS and micro ATM volume versus value is lower than the number of micro ATM market share.
Ashish?
So Lalit, it works like this. In terms of micro ATMs, the micro ATMs supplied, we have a complete chain of super distributor the merchants. And hence there is a certain amount of lag period by the time a device which is set into the market becomes active. And that is why there is a bit of differentiation between the number of devices that you would see getting deployed and their activity ratios picking up when a merchant starts doing transactions on a very regular basis and becomes I would say, qualified micro ATM merchant in about 3 to 4 months from the time it is deployed.
Thank you. So moving to AEPS, particularly you use an iris technology. How has that worked out when it comes to acceptance, given that most of them are used to the fingerprint?
So we are, I would say, one of the largest deployers of iris on AEPS, and this we did with the perspective of improving the ratios of fail ratios. We've had no acceptance issues at all, and I think it's working out quite well. And we continue to deploy iris devices along with biometric devices in the model that we roll out.
Moving to the next question, sir, can you please provide the revenue breakup according to your products as well as your distribution?
Yeah. So very quickly, revenue by product in FY21, 1/3 of revenue came from remittance, another 1/3 came from micro ATM AEPS, 20% from the business correspondence BC banking, as we say, 8% from CASA. This is the subscription which Ashish explained earlier, and 4% from CMS. In terms of the distribution, we have around 30% coming from North, 25% coming from West, and 15-18% coming from South, and then the remaining coming from East. That's how our distribution is.
Thank you, sir. Moving to the next question. What's the trends of CASA been with you, and what would the average balance a customer would need to maintain, in a quarter or in a month?
Well, like we explained, the CASA account is a subscription account, which is our highest. I would say the bulk of our CASA accounts are today about 85% as we speak today, are subscription account. We do not expect a minimum balance in any of our SA account, in this SA account. Having said that, the current current balances, average balance that customers are maintaining in SA accounts is the tune of about 850 rupees INR, and in our CASA, in our current accounts, that's to the tune of about 2,500 rupees INR. In terms of trend, I had explained earlier that last full year we were opening about 3,000 accounts a day. The current numbers show us we are in the trend. We are in the range of about 63 to 6,500 accounts per day. So this is practically doubled, and we're opening close to about 2 lakh accounts a month.
So how many of these accounts are active?
On a ratio basis, the active ratio of our accounts is about 70%, which is above industry standards, as I believe.
Okay, so moving to the next question, could you elaborate a little more on your BC business? The gentleman who's asked this question has given an example. Suppose a customer, withdraw cash from the merchant who's your shopkeeper, then how the merchant gets physical cash to give to the customer? How is it different than a normal ATM?
So let me try and break this into parts. And Ketan had explained that we run a completely prepaid model. The definition of prepaid is that to take in any cash on behalf of the bank, which is cash in product like domestic money transfers or cash deposits into accounts, the merchant would require to maintain an equivalent amount in an earnest money deposit account without at the back end. For cash withdrawal products, the merchant pays out from his wallet, his galla, his drawer, whatever you want to call it, and we reimburse immediately on a successful transaction having been closed. So the merchant is putting his own cash, and that is where he's incentivized for the same. Having said that, like we explained, we have a super distributor, and each merchant is linked to a distributor or super distributor. Also, BPCL being a strategic partner, 11,000 plus of BPCL points are FINO banking points. These are cash-rich points. All merchants are mapped to one or other of these points. If they require cash, they can do an electronic fund transfer, pick up cash for their utilization. Next, cash management services, as Ketan had explained, is a cash-in product. We charge clients for borrowing that cash. That becomes the raw material which our merchants use on the output leg for products like micro ATM and AEPS, earning on both legs of it. Back to you, Lalit.
Thank you, sir. Moving to the next question, asking that, how different are you from a private sector bank?
So, private sector banks are into multiple products and largely at the top end, more on the urban side of or the semi-urban side of the business. Our focus is more on the emerging India. Our products are more specialized and for that particular segment of customers. Our expansion is happening through the merchant network rather than our own branch network. So large private sector banks are focusing more on expansion of branches per se, whereas we don't believe in creating a fixed asset or a fixed cost model. So our expansion is happening more on the asset light model as such. And our customer segment are the middle pyramid. So those are the broad, big differentiations which are there. Apart from that, technology, digital, I think we are as good as any other private sector bank.
So given that this is a merchant-based distribution model which requires minimum capital expenditure at your end, don't you see this model easily, replicable, given that there is a lot of competition already there in the market?
So not really. Actually, it's not about just giving a device to the merchant. It is much more is the 15 years of trust which we have built up with that merchant. It's about the robustness of our technology, our ecosystem, our people on the ground. We have more than 2,000 plus staff, which is there, the physical connect which our staff is having with the merchant. We have built up a full ecosystem at the back end where we are digitally connecting with the merchant. On call center, we are also, it's not easy to train those merchants for doing transactions. There is a lot of effort which goes into building up that training module with the merchant. So it's what Ashish said in his slide. It's about processes, it's about operations, culture, technology, systems, robustness. All that put together comes into the longer play, if I would say.
So another question coming in asking that, considering that you don't plan to do any cash burns or freebies if deep pockets like a PhonePe or a GPay come in your way, what kind of strategy you will implement, to protect your customer?
See, our customers are having cash as their business. So 80-90% of their business, or right now I would say 100% of the business is in cash. Tomorrow, 10 years, 5 years down the line, some of them would also start using digital. But the ability of FINO to build up a model in which we can digitize cash and put the money into the bank account of a customer and give him a simple app which can he use on his mobile phone, if he has a smartphone, is something which is uniqueness of FINO. So any company, one is that those companies are focusing more at the higher end, more on the digital side of the business. We are focusing at the physical, and we want to handle the customer over a period of time to digital. Plus the element of trust, which is and the convenience of banking with assistance, differentiates FINO as far as banking products is concerned. So one has to differentiate between a P2M product as well as a banking product.
Thank you, sir. Moving to the next question. What does the digital competitive landscape look like? Challenges in the future as UPI charges lower per transaction?
So, Ashish, you want to take this?
Sure. So, Lalit, I would put it in one word, in one sentence. COVID, domestic money transfers went down considerably. We were down by about 50-60% of peak volumes, what we were doing in DMT. Wave 2 came in. Before Wave 2 came in, we were back to about 80-90% of that. Wave 2, again, we saw a bit of a dip. And now, if you look at it, I think by the next couple of months, we will be past the prime of the DMT as an industry. In this entire period, UPI transactions have grown disproportionately. Is it that DMT is not grown? Is it that UPI has eaten into this thing? The aspect that one needs to understand that, like Rishi said, these are people who earn in cash. The first step of a digital transaction is digitizing that cash. And that's where FINO USP comes in to handle that customer, onboard him into an account, and thereafter starts the journey from digital to digital. So UPI, we don't see it as competition, but we see it as a product that will come into the life cycle of our customer, maybe not a step 1, but a step 2 and 3. And we would handle that customer. Back to you, Lal.
Thank you, sir. Moving to a question which takes you back to inception. What has the business of the company been from 2006 to 2016?
Well, that's an interesting question. So we started as a technology company, and that was the reason why ICICI incubated FINO to provide technology solution to microfinance companies. And from there, we morphed into services company. We started to provide BC services. We were at one point the largest financial inclusion player with smart card based programs, and we used to capture identity of a customer. Then the Aadhaar came in, and then we moved into an online platform. In the meantime, we also were working on the national projects like RSBY, which is the micro insurance product, which was handled at one point. We were one of the largest provider of over-the-counter cards for RSBY. We also worked on with the government on electronic benefit transfers before it became direct benefit transfer. We were also one of the largest vendor for UID on enrollments per se. So those are on-ground learnings which we had in the first 10 years of how technology will run. How can you issue card remotely in a very controlled manner? How do you manage teams so remotely and so deep into the country has been the strength of FINO. And some of the projects we were really very, very big scale projects. So I think our first 10 years of experience and learning helped us in in setting the bank the way we have set it up. And I think on hindsight, I think it's been a wonderful experience.
Thank you, sir. Moving to the next question, what is your merchant acquisition cost and your customer acquisition cost?
Merchant acquisition cost, Lalit, as I said, we do not pay anything for merchant acquisition. When we onboard a merchant, we incur zero capex cost. Merchant pays, or merchant gives us the onboarding fees, so we do not have to pay for merchant acquisition cost. Customer acquisition cost, just to give a perspective, Ashish mentioned CASA. It is a subscription-based product. When an account is opened, we take rupees 449. Our loaded cost, all taken together, is rupees 180, and 60% is the margin. Next year, the customer comes back, he renews. We don't have to pay any merchant commission, etc. So our margin further increases off. So the point is, neither for customer acquisition or for merchant acquisition, it is not a cost. It is a PAT positive model which we run.
Okay, so moving to the next question, which is asked by a gentleman named Mayank Agrawal from MK. If we are already there in 90% pin codes, then how will the future grow, and what could be the size of the merchant channel payment volumes of FINO 5-10 years down the line?
So if I look at the expansion strategy of FINO, we are there in 90%, but we are only covering about 770,000 merchants in the ecosystem. And if I look at from that point of view, we would be probably covering about 2,500 customers per point. Our endeavor is to reach a much higher number in going forward. The merchant ecosystem can expand much bigger, because from a pin code point of view, the pin code can hold many merchants. In some of the pin codes, we could be in only one point in that pin code. So expansion of the merchant itself is growing. As Ashish mentioned, the numbers are growing from FY21 also. Second is that we want to go deeper with the merchant. More products is something which we are offering. As we started to offer remittances, then we offered cash withdrawals, then we offered CASA. Recently, we started CMS. We are getting into prepaid. We are getting into international remittance. We are looking at investment other products and credit. So expansion of products also on the merchant ecosystem is expected to grow. So both growth on terms of expansion, in terms of wider reach, as well as deeper reach with the merchant on products, as well as in every geography. Gully FINO is something which we are aiming at.
Thank you. So what is the percentage of revenues that comes in from the BPCL network of petrol pumps across India for us?
5% of our transactions happen through BPCL, the partnership and the investor which they are there.
Okay, so from moving to the next question, from a merchant perspective, what is the investment that he has to make if he wants to become a FINO merchant?
Typically,
the merchant can come in under various models. Our basic model starts at INR 2,000, and our top of the line model goes, which is FINO Hamesha, where the merchant would get a laptop, printer, scanner, a counterfeit note detection machine, and so on and so forth. And that would be about INR 1 lakh. We categorize the merchants, and the commission structures are offered according to the plan that the merchant has taken with us. Back to you, Lalit.
Okay, sir. Moving to the next question, again, which reiterates that having a high pin code coverage, how do you see the core product growth runway? Could you please walk us through some, upcoming product launches or any kind of philosophy that you could explain?
The product side, let me give you a sense. One side is on the lending side. So let's put it this way. On a product suite side, liabilities is covered. Investment in terms of risk, that is insurance, we already offer. Transaction-based products like micro ATM, APS, and DMT already there. UPI, IMPS, all those are already available. Bill payment recharge is already done. What are we looking forward next? Lending. We do a referral income. We do referral worth about anywhere between 1,300 to 1,500 crores on gold loans for a partner bank on a yearly basis. we just started our merchant business loans, which we're doing a throughput about 5 crores on a daily basis. This is a daily business loan that we offer to our merchants, which increases its throughput. Small value customer loans have just gone live in a closed user group about 15 days back. So that's on the lending side. Which are the other ones that are going live or awaiting regulatory approval? Mutual funds, digital codes, international remittances, recurring deposits and fixed deposits, prepaid cards have just gone live. We're tying up with some pension funds to offer those kind of products also. So this is the runway of products. And like Rishi said, the variables are to increase the distribution base, increase the number of products so that the avenues of opportunities for the merchant to earn goes up, as also for our customer, we become the one-stop shop bank and doesn't need to look anywhere else. Back to you, Lalit.
Thank you, sir. Moving to the next question, could you throw some light on your Q1 profits, EBITDA? What has your top line EBITDA and PAT been?
Yeah, Lalit, just to give a context, our throughput or transactions have increased by 51% Q1Q, which is Q1 this year versus Q1 last year. Revenue has increased by 36%, stands at 206 crores, a growth of 36%. Throughput, I mentioned it off. Profit is increased by 69% quarter on quarter. Number of CASA accounts, which is a growth driver, has increased by 55%. So this is how our performance is coming through in terms of quarter on quarter. This is for quarter one.
Thank you, sir. Moving to the next question, what is the quantum of investment that you made in technology, given that tech is at core? And could you just take us through few of the features of your FINO Mitra and FINO BPay app?
So let me just give a quantum, and then Ashish can take you through where the money is being utilized. We've since inception of the bank, we've utilized around 180 crores into technology. Rather, we've invested 180 crores. This is across the core banking system and all the other technology tools, which Ashish can quickly run through.
Let me quickly give a rundown. The FINO Mitra app is a mobile banking app which we provide to our merchants. This, you can call it a banking as a service. Every and anything that the bank offers in terms of products, processes, service requests, which a customer needs to contact the bank, is available on that application from a merchant's perspective, as also from a customer's perspective. From a self perspective, everything that we do on the sister side is available on our BPay app, which is our mobile banking application, which is utilized by our customers. And that is where anything which is there from a self-service perspective, so you can call it recharges, fund transfers, top-ups, ticket bookings, all these aspects are available on the mobile banking applications, including self-service and service requests from a customer perspective. So it covers the entire spectrum or the life cycle of the merchant, as also the life cycle of the customer. And very soon we shall be going live with self-account opening for our customers on the app also.
Moving to the next question, what is the break-even period for a merchant?
Typically, a merchant recovers and his break-even period is anywhere between 4 to 5 months.
Okay, so moving to the next question, does the micro ATM accept transactions like withdrawal of money in case customers have accounts with different bank accounts?
Yes, that is the prime listing. Our micro ATM and APS business is 99.9% of us, where customers of other banks are coming and availing services at our point.
Thank you, sir. Could you throw some more light between, what does a normal ATM do and what does a micro ATM do?
So currently, a micro ATM offers two types of transactions. One is the balance inquiry and one is cash withdrawal. From an APS perspective, there is one addition, which is the mini statement, which we are also working with NPCI to bring in to work on the mini statement side. So currently, these are the two sets of services which are available between micro ATM and APS. Cash deposit is the product which has gone live on the APS side for about 15, 17 banks, and that COG or pilot is on with NPCI at a larger scale. Other than that, if you look at the ATM side, you can do things like updation of mobile number, certain service requests, which is the differentiation in terms of the non-financial transactions, which are not available on these devices, which is available on an ATM.
Just to add to what Ashish is saying, I think the differentiation is also that the micro ATM, the cost is significantly lower. and the merchant uses his own cash for payments and doesn't need to get cash from outside to be used for the micro ATM purpose. So technology is handled through the small device and the rails which are built up by NPCI, whereas the cash is provided by the merchant. In case of ATM, everything is done by that big box which you see as an ATM machine.
Thank you. So moving to the next question on us, of course, looking at a phygital route and reducing the number of branches, but as CSPs have increased, what is the cost actually, to incur, for operating a branch, operating a CSP? Are we looking at all this?
So, Lalit, as we said, it is our endeavor to move towards a variabilized cost. Okay. We have some branches over last 15 years, FINO as a brand has built, the kind of trust. So now we can go to gully FINO without any capex cost. The movement which you are seeing towards a merchant is to facilitate lower fixed cost. But typically for a branch which we have, which is a very lean branch, again, we end up having a cost of anywhere in the range of 30,000-40,000.
So then moving to the next question, of someone who missed asking it, what is your variable cost percentage? Could you just reiterate that once again?
No worries, Lalit. Our variable cost of our total OPEX cost, which is there, 71% of our cost is variable, which is where we pay only when the transaction happens.
Thank you, sir. Then moving to the next question that's come in, how is the micro ATM different from APS? Which one is more cost efficient for the customer?
So from a differentiation point of view, I think the basic difference lies in the fact that the Aadhaar-enabled payment system is linked to UIDI and works on biometric stroke iris authentication. And the micro ATM works on the standard debit card chip and pin architecture, which is the same rails of the national financial switch as the ATM. That is the basic differentiation. Second aspect, on a micro ATM, the debit card is linked to one account, whereas on APS, the pop-up would show the number of accounts to which your Aadhaar number is linked to, and you can choose which one you want to withdraw money out of. So these are the two basic differentiations in the fact of authentication and this side.
So moving ahead to the next question, which asks basis the commissions that we earn per transaction. In case someone withdraws 1,000 rupees, what do we earn?
So out here, just to give a perspective, our take rate for micro ATM APS is 46 basis points, of which 60% goes in the product cost or the distribution cost. We end up earning 40% of the 46 basis points. So 40% is our margin, what we earn on micro ATM APS.
Okay, next question being, what has been your advertising and promotional expenses over the last few years?
I think our last year's advertisement expenses was $1 million or 7.5 crores is what we had incurred for last year.
Okay, sir. We'll just wait to see if any more questions are coming in. So there's a question which asks that you've earmarked 300 crores for Tier 1 capital for expansion. What exactly are you planning to do with this?
The utilization, for 300 crores will be largely for 3 to 4 aspects, primarily for technology and digital. Rishi earlier mentioned that we are, putting digital apps or digital overlay for all the products which we are doing it off. Technology, we are, by virtue of our DNA, we think is technology. So we are further investing into our system so that, it facilitates growth. So approximately 75% of our, the primary issuance is expected to go through technology and digital. We also require some comfort capital for which, which is where we have raised this off. And in times to come, branding and marketing also will be enhanced. All of this would be for visibility and transactions. We do not intend to do cash burns even in the times to come. We continue our DNA of asset light as well as pricing the products right rather than burning money.
Thank you, sir. Moving to the next question. What is the average age of our customers?
The average age of our customers will range between, I think, about 28 to 32.
Thank you, sir. You operate in a highly competitive market where you've got MFIs and SFBs and SCBs and private and public sector banks, NBFCs, payment banks, all catering to the unserved and underserved market. While the total addressable market may be huge and enough for everyone to coexist, there is a very thin line in the offering. So it all comes down to, how are you different? Could you please reiterate, on how you are different?
I think, Lalit, we had answered this question when you had asked us about the private sector bank and how do we differentiate. I think we had answered this quite in detail because, see, some of the NBFCs and others are focusing on the credit side, whereas we are focusing on the transaction payment side. So to that extent, we are different from the NBFCs and MFIs separately. In fact, a lot of NBFCs and MFI work with us on our cash management CMS product per se. So I think the answer is broadly the same, which I said earlier, plus just what I've added.
Thank you, sir. Next question is, what is the annual churn rate of merchants for the company?
In terms of churn rate, I would explain is that on a month-to-month basis, 70% of our merchants are active. The way to look at it is the merchant never drops off the radar or moves out of the system. If a merchant does not transact for a period of 180 days or 6 months, we put him into inactive bucket. Like I explained, we have a very deep set merchant engagement plan. Within the team, there is a win-back team which works with the merchant to resolve issues to bring the merchant back into the foray. On a month-to-month basis, our analytic teams gives out trends in terms of merchants who are most likely to move out of the system because of certain issues, trending basis, and the win-back team resolve the issues to keep them going. The other thing to note is on a 70% basis, the merchant may not be unique across all months, and this may or may not be his primary line of business. As we explained earlier, he has a secondary line income, and that's why may or may not work on this thing. But on a month-to-month basis, 70% activity ratio across all our product lines. Back to you, Lalit.
Thank you, sir. Moving to the last question, actually, again, and could you reiterate, as you've answered this already, but how much do you charge a customer if the person withdraws, say, 1,000 rupees?
So, sorry, Ashish, go ahead. You were saying.
So charges wise, like Ketan mentioned, the take rate is 0.46%. It's an interchange which is there. The interchange is 0.5 or 15 rupees, whichever is lower. And the take rate is naturally an aggregation of the amounts because the amounts would vary from, let's say, 500 to even up to 15,000 rupees. So that's the take rate that Ketan mentioned, out of which 40% is our margin and 60% goes into commissions and other expenses to run that product.
Thank you, sir. Given that we've attended most of the questions, and if there are any questions which are unanswered, we'll definitely reach out to you. You can send in an email at ipoteam@conceptpr.com and we'll respond back to you swiftly. Thank you, everyone, for showing interest in knowing more about the company, its leadership and future potential. I would now like to call upon Mr. Mangesh Gogre from Nomura to make the closing speech before we end today's webinar.
Thank you, Lalit. Good evening, ladies and gentlemen. I would like to begin by extending sincere thanks to Mr. Rishi Gupta and the entire FINO team for giving Nomura this opportunity. It is indeed an honor and privilege for Nomura to partner with FINO in this exciting journey of going public. I'm sure during the last hour, the presentation has been very helpful to know more about the exciting story of FINO, a profitable, fast-growing fintech company. We hope the management was able to address all your queries. To reiterate the deal specs, the IPO will open for subscription on 29th November, Friday, and close for subscription on 2nd November, Tuesday. And books will open and close on 28th of October, Thursday. The price band is 560 to 577 rupees per share. At the top end, the IPO size will be 1,200 crore rupees. On behalf of FINO and my fellow book runners, thank you again for joining us today for this marquee event. We look forward to your support in making this IPO a blockbuster success. Thank you very much.
Thank you, Mr. Gogre, esteemed audience. We've now come to the end of the webinar. We look forward to your participation and support on making this initial public offering a great success. Wishing you all a great day and keep safe.